Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is November 24, 2024. A fairly busy video for you today I have planned. We'll go through the usual stuff, looking at indices, commodities, Bitcoin, almost $800,000, bonds, that sort of thing. But also I want to look at 21 individual companies' charts. I went through all the charts on the ASX yesterday. Well, maybe not all of them, but the ones I do have a look at, all my watch list. And I've come up with 21 companies whose charts look interesting for various reasons. Could be negative or positive. So I really want to get stuck into this video. But first, I was just going through some of my saved websites, and one of them is called Upcoming IPOs. And before I started recording this video, I had a quick look at this, and I just noticed there's a pretty big IPO tomorrow. A company called Cusp. Looks like they're going to be probably a market cap maybe just below 500 million, raising 337 million, issue price $2.50. A company that's focusing on payments and data. Now, we haven't had many big IPOs on the ASX this year. We had one sort of big one last week, Symbol Group, raising 136 million, civil construction. Now, the reason I like this particular website from small caps, you can go back through and look at all the IPOs going back to 2017. So if you go to 2017, you can see the first IPO that year was a company called, a company with a ticker code WQW that doesn't exist anymore. And then there's Skin Elements. I'm trying to find a company, Cobalt Blue. There he is. Cobalt Blue listed on the 2nd of February 2017. I'm just trying to find a pretty big company. Big Tin Can, it's not big. Big River Industries, they listed on the 1st of May. Now I'm just trying to find a bigger one. I'm pretty sure there's going to be some really big one here somewhere. Ordinate listed on the 30th of June 2017. They listed at $1.22. Share price is now $8.47. It's gone up 594%. So even though share price has fallen a fair bit over the past few months, it's still up a lot since IPO. So I really like this website because you can go through all the IPOs, all the listings since 2017. And in 2024, we haven't had many. Not many at all compared to previous, well, maybe not compared to last year, but definitely compared to 2020, 2021. We haven't had many listings. By far the biggest IPO this year has been Guzmani Gomez. Also Tasme, which has done really well. Technically, that chart looks pretty good still. Metals acquisition also pretty big. But other than that, not many big listings or IPOs on the ASX this year. And we have one in the next week. So hopefully the IPO area is starting to ramp up. I'm not sure why it's so quiet, because the XGO is at an all-time high. In fact, it closed at an all-time high, went to an all-time high on Tuesday session. We did see a little bit of selling on that day, but it did close at an all-time high on Friday. So pretty good week for the XJO. No complaints from me. In fact, the weekly chart is looking interesting. Closed at, what was it, 8,000, almost 8,400, up 1.31% for the week. And I've mentioned in previous technical updates video that where the XGO is right now, right on the top of the trading range, which has been in place for about 15 years, is really interesting, because this could point to some weakness in the future, or if the XGO goes above this particular, or the top of the trading range, that could mean the end of this 15-year period where the XGO has been trading in this range. And maybe this is a bullish sign, particularly what we have seen during the week. So pretty good week for the XGO, no complaints from me. In fact, if you go back to the daily chart, the last probably 7 trading days have been really good. The last weekday was Wednesday, the 13th of November. On that particular day, the low for the XGO was 8,139. So it's gone up about 300 points since then. So looking pretty good. And I think some of this strength in the XGO is because of CBA. And I would actually say, and could be quite controversial, CBA might be the biggest, worst bubble in the ASX history. That's probably going a little bit too far. It's definitely in a bubble right now. And the reason I say it's in a bubble is because the PE ratio of CBA is getting to the point where there's just no justification of buying CBA at these levels. Yet people are still buying. PE ratio of CBA is 30. The PE ratio of CBA should be at most 15. So the valuation of CBA is double where it should be, and there's no future growth for that company. Anyway, but that is what's driving, in my opinion, what's driving the SGO higher is that strength in the banks, and that could come to an end at any time. Okay, so let's go back to the XSO. How are the small caps doing? Not quite as strong, I suppose, as the XJO. It doesn't look as good, not at all-time highs. In fact, the all-time highs for the XSO was still back in 2007. Don't believe me. Let's go back to 2007. Yep, got up to 4,200. So still well off the all-time highs. And it did break out a few weeks ago. And I need to see it going higher from now on because we have seen it sort of going sideways over the last few weeks. An okay week this week, up about 0.5%, 0.54%. But that was after a down week last week, down 1.47%. So not quite as much strength in the small caps compared to the larger companies. And again, I think that's because of strength in the banks, particularly CBA. So can't complain about this because it did break out about 2 months ago, but I would like to see a little bit more strength in the small caps right now. Okay, that's the Aussie indices now. Let's have a look at the Americans. And pretty good end to the week, particularly for the Dow Jones. NASDAQ up 0.17%. And overall for the week, up 1.87%. But that's after being down 3.4% the previous week. And that's after being up 5.4% during the Trump winning the presidential election week. So that was a pretty good week for equities. And so a fair bit of volatility since then. You can definitely see that on the daily chart. You can see a fair bit of volatility, particularly towards the end of last week. And I was a little bit surprised because the NASDAQ was down 2.4% last Friday, and we didn't see that weakness translate to the Australian market. But anyway, if you just continue this uptrend, this short-term uptrend, it's playing perfectly to that uptrend. It touched it and it zoomed a little bit higher. Not at all-time highs, that was a few weeks ago, but still moving in the right direction. No complaints when it comes to the NASDAQ. And same can be said for the Dow Jones, although looking a little bit more bullish. A pretty good week for the Dow Jones. So I was going to say, NASDAQ didn't have a bad week, but nothing compared to the Dow Jones. Actually, up 1.96%. I thought it was a little bit higher. Yeah, NASDAQ was up 1.87%, and Dow Jones was up 1.96%. I thought it was higher. It looked higher. It might have been just the last year. The last 3 trading days was really good. That's what I was looking at. Really good 3 days, last 3 days, up 1.1% on Thursday, 1% on Friday, and a little bit on the Wednesday session. So a nice little bounce for the Dow Jones after 3 or 4 days of being weak. So again, near all-time highs for the Dow Jones. Still a little bit more bullish than the NASDAQ, but there's not much difference between the two. And what about the small caps in the United States? Russell 2000, how's this looking? And just like the Dow Jones, a really good bounce, nice bounce during the week. I would assume this was better than 2%. The Russell 2000 up 4.46%, so a lot of strength in the small caps in the United States, which again didn't really translate to the Australian market, but a lot of volatility. You can see that last 3 weeks for the Russell 2000, up 8.6%, down 4%, up 4.5%. But I am saying and confirming that we have seen a breakout for the Russell 2000. We saw that breakout a few weeks ago on the Trump trade, and we then saw a dip, and then it's just bounced off again. So that's looking pretty good. A lot of volatility still in the small cap section. Okay, now let's turn our attention to international indices, starting with the Nikkei. We'll go and have a look at the weekly charts for these. And Nikkei flat, or down a little bit, down 0.93%. But if you have a look at the 5 days, sort of going sideways, not much action at all during the week. And the daily chart for Nikkei just shows it going sideways. Not much action with the Nikkei. Now let's have a look at the Hang Seng, a negative week. So 2 negative weeks in a row for the Hang Seng, down 1% last week, and the previous week down 6.3%. So this is starting to look a little bit weaker. Now, I was actually liking this probably 3 weeks ago, just before Trump got in, and it has fallen away since then. So was looking bullish, now no longer. And of course, this pretty good run in the Hang Seng back in late September was because of the stimulus in China. Now on to the DAX, and we'll go back to the weekly for the DAX and the FTSE. DAX up a little bit, looks like, just up a little bit, up 0.58%, still looks pretty good. No complaints with the DAX. And remember, the FTSE was looking weak. Now, have we seen a bit of a bounce in the FTSE? And we have. We have seen the bounce, up 2.5% for the week. Just going to turn our attention to the daily chart. Yeah, a really good day on Friday, up 1.4%. So this is a nice little turnaround for the FTSE, short-term turnaround, but back to where it was, going sideways. So this could have been a nice little buy the dips situation for the FTSE, for whatever companies you could buy within this index. In fact, that's a really nice little support level at around about 8,000. Yeah, really nice support level there for the FTSE. Okay, that's the indices around the world. Maybe there are some other ones I haven't looked at today, and my pen lid has just dropped off. Now let's turn our attention to commodities, and really good bounce for gold. Pretty good bounce for gold. It's actually bounced perfectly off the 100-day moving average. That's an almost perfect bounce off it. And you can sort of see that weakness in gold was coming to an end on the Thursday and Friday, 14th and 15th of November. The reason I say that is it was going down, and then we did see some buying coming in on the Thursday session that week. And the reason I say there was a bit of buying coming in is because there was a bit of a shadow. And then we had a doji the next day, which is a good sign that sort of the fight between the bears and the bulls, which was being won by the bears, it was now even. And then all of a sudden the bears started to win, the bulls started to win. And we have seen a really good bounce in gold in the past week. In fact, the weekly chart for gold should look stellar because 5 up days in a row. And what a bullish candlestick, up 5.97%. Now, in saying this, I don't think, so gold up 5.97% for the week. I don't think we've seen a translation in gold companies. Let's just actually look at that. So I do have a gold watch list. Is there a gold company slower on the ASX, slower to move? Maybe. Okay, so let's have a look at some. What about Evolution Mining? Well, that actually does look pretty good. Northern Star. Oh, we did see a pretty big bounce on the Friday session, up 12.93%. That's huge. What about Perseus? It actually looks pretty good overall. Ramelius. Oh, we haven't seen a bounce here, have we? So 3, in fact, completely opposite. This is going in the wrong direction. This could be a nice little bounce play for Ramelius, Regis. This is starting to look really good. I don't mind this chart. It sort of broke out on Monday session. Wait there. This is the weekly chart. I was going to say that was Monday, but let's go back to the daily chart. Let's go back to the daily chart. Okay, so we have seen a bounce with Evolution. What about Gold Road? Yeah, they are bouncing. For some reason, I was thinking they haven't bounced. Definitely bouncing. In fact, Northern Star up 12% for the week. And Perseus, slight bounce there. Ramelius. Oh, this hasn't really bounced as much as some of the others. This might be a nice little play. Ramelius. Resolute. Regis, sorry. We don't really need to look at Resolute because that's why. What else? What about West African? I don't think this has bounced. Yeah, this hasn't bounced at all. What about some of the smaller players? What about Capricorn? Has this bounced? Yeah, it's nearly at all-time highs. There you go. Orobanda, that's probably bounced. No, Orobanda hasn't bounced at all. This is one. What about Auric Mining? This is the one I did sell, and maybe it hasn't bounced either. Yeah, very little bounce here. So looks like most of the money in gold is going into the big companies, the bigger ones, your bigger gold players, and the money hasn't flowed through to some of the smaller players. So maybe now is time to jump on some of these smaller gold producers. That's just me thinking on the fly. What about Kingston? Yeah, a lot of these smaller producers haven't really bounced at all. Yeah, interesting. What about Bellevue? Small bounce there. Anyway, okay, so let's go back to. So we've talked about gold, a really good bounce for the week, up. What was it? 5% or something. 5.6% if I remember. No, 5.97%. Have we seen a similar bounce with silver? And the answer to that is no. No, a very small bounce, not much of a bounce, up 2.98%. And if you do have a look at the weekly chart, it's actually bounced off the shorter two moving average channel. It's done that a few times in the past about 3 or 4 months. If you have a look at the daily chart, not quite as exciting, but still okay. Would have liked to seen a better bounce in silver, sort of like what we've seen in gold, but quite hasn't happened yet. So it did fall through a support level 3 weeks ago, 6th of November, and I need to see it get back above that level for me to be a little bit more bullish on silver. But if gold keeps going up, silver should go up as well. What about hot copper? Not hot, just copper. This looks pretty weak. I'm going to say this looks pretty weak. Not much action in the week. In fact, flat, up 0.53%. But the daily chart, it's just, I'm not excited about this at all. Maybe there is a bit of support at these levels. There's a nice lateral support level right there. Now, I've extended that line, and we did see copper bounce off that level back in August, and it almost bounced off that level on the 14th of November. So that is a very important level, around about $4 for copper. Okay, so that's the gold, silver, copper. Now let's turn our attention to iron ore, uranium, and oil. First of all, iron ore has had a bounce the last 5 or 6 trading days. Pretty good week, I suppose. Pretty good 2 weeks. Up 1.91% after being up 4% the previous week. So this is pretty good. I like this little bounce, but still in more of a downtrend than anything. But the main thing is we didn't see iron ore get down to $90 like we saw back in September. So that could be a good sign moving forward that the bottom has been reached, that bottom in September is the bottom. But still no sign of any uptrend developing, no breakout for iron ore. Uranium's been all over the place. I thought it was breaking out back in October, and then it just dropped. And then there's that really good day on the 12th of November, and it's had I think it's down for the week though. Yeah, down slightly for the week, down 0.76%. But if anything, I'd say neutral. I'm not bearish or bullish on this particular chart. And what about oil? It is above $70. So pretty good week for oil, maybe because of increased tensions in Ukraine or maybe the Middle East. I don't think there's increased tensions in the Middle East. Anyway, up 6.3% for the week. Pretty good week for oil. But when you do have a look at the weekly chart, there's no trend. $64 remains a really good support level for this particular commodity, but up 1 week, down the next, up 1 week, down the next. It's all over the place. And you can never see by looking at the daily chart. If anything, it's in a short-term downtrend, but it's a fairly weak short-term downtrend. We could look at gas. No. What about coal? No, it's going sideways. Tin, nickel, and finally palladium. Did have a nice bounce at the start of the week, and that bounce looks like it's coming to an end. Up 5.9% for the week. The reason I say this looks like it's coming to an end, it's a really good day on Monday and Tuesday, and then the next 3 days, not really anything happening. And it's hit the short-term moving average channel, which is either a support or resistance level. And at this point in time, maybe it's a resistance level for palladium. Okay, so that's the commodities. Now let's turn our attention to crypto. Bitcoin, since I've been speaking, I think it's fallen below 98,000. I'm pretty sure it was above 98,000. Now it's 97,832. But Bitcoin still looks pretty good. Is there any complaints about Bitcoin here? So 3 really good weeks in a row. So we're talking about up 17%, 11.7%, and 8.9% in a row. So this is in a pretty good volume as well. This is the very definition of a breakout. Now, the only problem with Bitcoin, there's no financial news. There's no numbers, but the financial news for Bitcoin and other cryptos was Trump getting in power. And that's why crypto has gone on a massive run. Wouldn't be surprised to see $100,000 as a really natural resistance level. I wouldn't be surprised to see a lot of people selling Bitcoin when it gets to 100,000 because it's a round number. it's probably a really powerful, strong, round number, $100,000. And in fact, on Friday, Bitcoin did get to 99,800. And I wouldn't be surprised to see some people selling at 99 or have their sell bids at 99,999. Anyway, so if Bitcoin gets above 100,000, that would be a really strong move from this particular crypto. So you can't be any more bullish than this. Now, I wouldn't be surprised to see a little bit of a dip, but after the initial rise, we didn't see any dip. Went sideways for a little bit, consolidated for maybe 5 or 6 days, and then another run. So maybe that's what we're going to see. Just go sideways for a few days, and then roar up beyond 100,000. Ethereum, or Ethereum, not Ethereum, this looks like it is breaking out from the downtrend. So that's what I'm looking at right now. There's this downtrend that's been in place since March. Not a long downtrend, but it's definitely there. And we've seen, you can see, it got to a high back in March, struggled to get above this downtrend line in June, hit the downtrend line back start of November, and then pulled lower. And then finally, it looks like it's trying to get above this level in the last day or so. So this could be the breakout for Ethereum. Now onto bonds, and bonds have been going higher. And it still looks like it's going higher, still in an uptrend. So it's moving in the wrong direction. And this is, I think, pointing towards a possibility that interest rates might stay a little bit higher than expected, and inflation might stay a little bit higher than expected, and that Trump, and I think a lot of people did vote for Trump because of high inflation over the past few years, and I think some of those people are going to be a little bit shocked that this high inflation might stick around. Or elevated inflation might stick around, particularly if he moves forward with tariffs. Tariffs will not be good for inflation. We will see higher prices. Americans will see higher prices, maybe not us, but they will see higher prices, both for domestic and international products, and that would not be good for inflation. So I think some people who did vote for Trump because of that sort of thing are going to be in for a little bit of shock. And the bond market, that's exactly what the bond market is seeing and thinking right now. That's what I think. Anyway, what else? And currency. Yes, and I don't think Trump likes this. The US dollar is strong. He's really strong right now, and he wants a weak dollar. So the reason he wants a weak dollar is so American products are more competitive on the international stage. And with a strong dollar, that's complete opposite. So he wants a weak dollar, and we have seen the Australian dollar collapse. Maybe not collapse, but it has fallen significantly since the start of October. But it's been one of the strongest currencies in the world. I had a look at the chart. It's been one of the strongest currencies compared to the US dollar. Most currencies, if not all currencies, have fallen compared to the US dollar, and Australian dollar has been one of the strongest. Can't remember where I saw that chart. Probably was on Twitter or X. Anyway, so that's the end of the commodities, indices, Bitcoin, bonds, and currency. Now I've got 21 individual companies charts to get through. We'll start off with Domino's Pizzas. Now, I've chosen these charts for various reasons. So Domino's Pizza is one I chose because it started to look really positive. So when you do trade, when you do look at charts, you're not going to be right 100% of the time. It's an almost impossibility. You are going to be wrong. And how you react after you're wrong, after you realize you're wrong, is very important. Now, if you go back to, say, December last year, it looks like Domino's was showing some strength. So I'm going back to January of this year. If you look at this chart, you go, oh, it's starting to look interesting, Domino's Pizza. We had the same thing back in early 2023. And I was thinking back here in late last year, early this year, all this chart is starting to look interesting. And then when the company released a negative trading update on the 25th of January, share price just collapsed 31%. And the share price has not recovered since then. Now, recently, the share price started to look okay, not quite as strong as what we saw last year. But I was thinking maybe because of what we've seen in the last 2 years, the Domino's Pizza share price might rally towards the end of this year. We haven't seen it yet. In fact, the share price just recently was at a long-term low. And when I say long-term low, I'm talking about the 12-year low, I think. So last time the share price was that low was 2015. So a 9-year low, almost 10-year low in Domino's Pizza share price. And there's just nothing here, nothing at all. I was getting a little bit interested here, but share price has fallen to a low. And definitely nothing to see here. Anyway, I'm not sure why I included Domino's Pizzas, to be honest with you, but it's there. Okay, Michael Hill Jewelers. This is, I wouldn't say I'm really keen on this one, but this one is starting to show a little bit of, I wouldn't say strength, but it's starting to look a little bit more intriguing. There are signs that the share price wants to start moving into an uptrend. Not sure if the company has released any trading updates, that sort of thing. And the share price is trying to get above 60 cents. Share price right now is at 60 cents. The reason 60 cents is important is because the share price rallied to 60 cents in July and then fell away. It rallied to 60 cents at the end of October and then fell away slightly. It got to, or went above 60 cents on the 21st, so that's on the Thursday session. And then on Friday session, we did see the share price drop a little bit straight to 60 cents. So potential breakout for Michael Hill Jewelers. There's also a downtrend as to get through. This downtrend has been in play for about almost 3 years. Almost 3 years, and the price of that downtrend line is about 70 cents. So I'm not overly bullish on this one, but definitely it looks like the share price wants to move into an uptrend. The one thing I'd like to see is probably a positive trading update from the company, some higher volume coming in. You can see some really good volume coming in May, June. That did solidify the bottom. So that bottom was at about 40 cents. So if you bought at the bottom, you've made a nice 50% since then. Okay, Articore. This one looks ugly. I think I included Articore because there was a question in the comment section. So I had a quick look at Articore, and there's nothing positive at all about this chart. I can't think of one positive thing. If you look at the weekly chart for Articore, I'm pretty sure this used to be red bubble. If you look at the weekly chart, you can see the lows back during the COVID-19 financial panic were about 40 cents, and the share price of Articore is now 29.5 cents. So we're talking about all-time low for this company. And the most recent all-time low was back in June 2023 at about 30 cents. So share price of Articore is at an all-time low, and that's not good. And not a good thing at all. Now, even when you look at the valuation of this company, I'm like, I don't know. Markup is 84 million. Is the company profitable? According to this, no. According to TradingView, it's not profitable. Revenue is all over the place. It has been profitable, was profitable last year. Actually, that's the semi-annual. And I'm just trying to see if it was profitable in a year. Profitable 2021, $31 million of profit, but it's been unprofitable the last 3 years, and revenue's been dropping. And that sort of translates to the chart. Share price keeps on dropping. So I can't see anything positive about this chart at all. Pexa, well, another negative one is Pexa. Pexa. This one's all over the place. Now, I did have an uptrend line here, and that broke back in the start of November. So less than 1 month ago, it broke. And the last week or so, the Pexa share price has just collapsed. Not sure why. The share price has dropped 7.7%, and this is a negative sign. That's probably a negative chart. Yeah, so this one I'm not liking at all. If I was trading this, I would definitely be out. In fact, I probably would have sold if I was trying to trade this back in when it broke below this uptrend line. So that would have been my sell signal. Not sure when I would have sold, but I would have sold. Okay. Matrix, Composites, and Engineering. I was going to do have this as one of my small cap stocks of the day, but other companies got in the way. And the company did release a presentation. I had a look at that presentation. I was intrigued by the company. And then I had a look at the chart and I went, ooh, it's not a good looking chart. However, you notice the share price, and I put this support line in. Look where the share price is now. It's about 22 cents, 22, 23 cents. Have a look at the weekly chart. I went, ooh, okay. So the share price did get down to this level back in October 2023. So it could be a support level. for Matrix. There was a nice little breakout back in early 2023, some really good volume coming through January, February of that particular year. So that was a pretty good period for this company. Share price has been going sideways since then. Definitely there's a bit of a resistance level, say between about 36 and 38 cents. That's undoubted. It's had real trouble getting above that level, but this could be trading in a range, and maybe it's at the bottom of the range right now. So I have actually put this onto my watch list as a sneaky buy at around about 22 to 23 cents. We also have seen some good volume coming in the last 2 weeks. I'm not sure why the share price has dropped, but it has, and a possible buy. And that's just because I saw a presentation. I had a look at the presentation. I went, oh, this company sounds interesting. Then I had a look at the chart. I went, oh, chart looks interesting as well. Incitec Pivot. I've been watching this chart for about 3 months. It started to show a little bit of promise back in May. So that's not 3 months ago. That's 6 months ago. And then it pulled back, did not do anything much, and then started to go higher again in August, September. And then we had a pullback. We're just seeing the share price going up and down like a yo-yo or like on a roller coaster. And in the past few weeks, we have seen the share price get to 320, which is a really important level for this company, going all the way back to 2023. So right there is a really important level, because share price got to a high back then in September last year, got to $3.20 in September this year, then pulled back. It had trouble getting by this level on the 11th of November. You can see share price actually got above there briefly. And the last 3 or 4 trading days, share price has got to 320 and is trying to break through, but is struggling. But this chart actually doesn't look that bad, particularly if the share price can get above $3.20. So Incitec Pivot, I probably would say this is definitely not a high quality company, but the chart looks interesting. And if you just have a look at the volume here, we have seen some spikes in volume. So subtle increase in volume as well over the past 3 months. Okay, prophecy. So I've been thinking about taking a position in Matrix just because of where the share price is at a really interesting support level, maybe some value in that company. I have taken a position in Prophecy International, and I've been thinking the same thing. So share price fell, I can't remember why the share price fell on 12th of November, maybe a slightly negative trading update, but then they released something else which actually had some good vibes in it. And the share price hasn't really responded to that. But 50 cents was a really interesting level for me when it comes to this company. So I bought some shares at 50.5 cents. Why not? And I definitely can see this bouncing if you don't see much selling coming on. Now, the one problem with this company, it is illiquidly traded. And I was following the share price and the selling and buying of this company, and there was just one sell, and that drove the share price down. I think it was on the Thursday session. Share price got to 52.5 cents, and then right on close, someone just dumped their shares on the market, and the share price went from 52.5 cents back down to 50 cents. And all it took was one trade. So that's the problem with these sort of companies. If someone just needs to get out, they will just dump their shares on the market, and you see the share price drop maybe 10% in one trade. Yeah, as much as 10% in one trade, yes. But I am thinking that there is possible some good support at this level. And the reason I say that is if you look at the weekly chart, and you go all the way back to 2020, this has been a support level for this company. It's numerous times. Share price of this company has hit 50 cents and bounced numerous times. And on one occasion, share price went from 50 cents all the way up to $1.70. I don't think it's going to happen again. But 50 cents was a nice little, price for me for this company. I could definitely see the share price higher, and they are talking about becoming cash flow positive in financial year 25. And I think if they can achieve that and become profitable and keep on growing, I think this is a nice little price to pay. Valuation only 37 million. Yeah, anyway, so that's Prophecy. Now, on the flip side, Droneshield, how low can it go? So this is the weekly chart. It's just been one bad week after another, after a really good week. Now, we're not hearing much about Droneshield anymore. No one's talking about Droneshield on AusBiz and asking questions, that sort of thing. So definitely sentiment has shifted really negative for this company. So more than likely, the only shareholders in Droneshield right now are those who are quite positive, quite bullish on the future of this company. But when you look at the technicals, nothing much to see here. In fact, The share price is in a downtrend. Share price keeps on falling, down to 72 cents now. There's no support levels at all at right now. So pretty negative chart for Droneshield. And I'm going to be honest, I think the sell signal was the 16th of July 2024 when the share price dropped 22% on no news. That was a sell signal. And I got out the previous day. Not completely, I should mention that. I did sell most the previous day, and then I completely got out on the 19th of July. There was a bounce that day, and I just saw the opportunity to get out. Anyway, so I don't see anything positive with Droneshield right now. Business-wise, I don't know. It's just the chart I'm doing with Droneshield. No, on the flip side, so Droneshield looks really negative. On the flip side, you know what looks positive? A company called Vection Technologies. They're in VR, virtual reality, and augmented virtual reality. And for some reason, the market has got really interested in this company all of a sudden. Now, they have released, well, they keep releasing news, but that's what they've been doing ever since the share price moved into downtrend. They always were releasing news during this period of downtrend, but for some reason, the market got really excited. And it seems like it was an announcement on the 21st of October. Really big volume coming in on that day. Share price rose 30%. So let's have a look at that particular announcement. The 30th, oh, I've got to log in. VR1, 30th, what was it? 30th of October? Do I get that right? 30th of October. 21st of October. 21st of October, we have to go back 1 month, so it's just over a month ago. Vection unveils AI platform with Dell. I think it's just a name drop, Dell. Okay, if it was unveils AI platform with a company you never heard of, probably not as much excitement. I wouldn't say fall victim, that's probably the one way I'd put it. I'm not that enthused by these sort of announcements because more than likely, any sort of benefits in this sort of deal between Vection Technologies and Dell falls towards Dell. More than likely, there's not much benefits for Vection Technologies. It's just a name drop. Maybe they get some benefits, but all the risk is with Vection, no risk with Dell, and most of the benefits more than likely will flow towards Dell. But it has done wonders for the chart and sentiment in this company. I think it looks like the sentiment in this company shifted with that particular announcement. The share price has just taken off. In fact, the share price has more than tripled. It's almost quadrupled since then. Look at the volume. Look at the volume. And I'm going to show you a few other charts where you have seen pretty good volume coming in the last few months. I would like to see the share price of this company dip back, say towards 2 cents, maintain some volume, and also release a good Appendix 4C. That's probably the thing I'm looking at the most. So just have a look at their last Appendix 4C. I have no interest in this company at this point in time. So they had $8 million in receipts, but were operating cash flow negative $4.1 million. That's a lot of cash burn. Product manufacturing operating costs, $10.3 million. That's a lot of money spent. So this company is burning through cash. I don't think it's like this every single quarter. They also have loans, about $9.9 million of borrowing. So that's also a little bit of concern. Okay, so that's Vection Technologies. Talking about volume, a company called Gratifii. Now, I'm not interested in this company because the share price is below 1 cent, but share price is 0.6 cents. But look at the volume the last 2 weeks. No volume. You go all the way back to 2023, most of 2024, very little volume. And then all of a sudden, we've seen just a massive explosion in volume in November. We started to see it in October, but it's really ramped up in November. Not sure what's happening, but this could be a sign that things are starting to turn around and maybe we'll see some buying coming in. If I had to buy shares in a company whose share price was below 1 cent, this is sort of situation I would think about, but only think about at this point in time. But definitely volume is looking really intriguing for Gratifii. I always want to call this company Graffiti, but it's Gratifii. Now, going from positive to negative, well, maybe positive to definitely negative, Doug Technologies. Okay, so I bought Doug Technologies all the way back here in 2023. I've completely sold out, by the way, now. Completely sold out. I took profits back in April or May of this year, and I thought it was a mistake because the share price kept on rising. In fact, the share price went up to 325 in August. I was thinking, oh, why did I take profits? And then all of a sudden, just like that, sentiment in this company just shifted from positive to negative. Not sure what it is, but you can definitely see it in the chart. Share price has dropped from $3.25 to $1.50. Share price has more than halved in a few months. And the share price just keeps on dropping, keeps on dropping, keeps on dropping. The company keeps on releasing updates, which don't sound that bad. If you have a look at their announcements, I don't see anything that bad in them. So business update on the 29th of October. And 29th of October, share price did nothing that day. And I have no idea how low the share price is going to go. I wouldn't be surprised to see this massively oversold, but I was thinking that at the start of the week, and we didn't see much of a bounce. Anyway, Doug Technologies, I've completely sold out of, and the main reason to chart. And now I'm quite glad I took profits as it was going up. This is one instance where I'm glad I took profits. Now it's a company I know nothing about, Nobleoak Life. Ticker NOL. This company is profitable. They make money. I think they're in life insurance. Might be mistaken. In fact, no, it doesn't matter what this company does. Nobleoak Life, but I'm pretty sure they are profitable. Well, actually, life insurance would make sense because Nobleoak Life. Okay, I didn't think about that until now. So why am I interested in this? Well, this is a recent listing. Okay, if you think recent as in August 2021, share price in a downtrend from 2022 all the way through to really this year. The low in the share price was in June, but it's starting to look like the share price is moving into an uptrend. And I have played this before with many of these recent IPOs, maybe not 3 years ago, 3 years from when they listed, but initially the share price in a downtrend, and when a bit of not sure what causes the trend and the sentiment to shift, but I've seen this play out time and time again. Initially downtrend, and then the share price starts to turn up, and that's the time to buy. For instance, in fact, Doug is a perfect example. This is one I was following for a while. They listed, share price was going down, and then all of a sudden the share price turned, and I bought just after that. Another good one was Duratec. Duratec, they listed, share price went down. Was that down? No, there's no reason to get excited about this company. In fact, the downtrend for this company lasted almost about 3 years. And then there's a really nice breakout in late 2022, and I bought some shares at 55.5 cents. That was a good play. Bought some more shares at $1.28. Another one was Shape Australia. So this was another one where the share price drifting down. Look at that, drifting down. The share price started to turn up, and there was a nice little breakout in December of last year, so about a year ago, and I bought some shares at $1.86. I was a little bit hesitant buying shares because this company I would classify as being illiquidly traded, but the share price just keeps on going up. Anyway, so that reminds me of Nobleoak. This chart, I'm thinking, ooh, I am keen on this one. Maybe. I don't know. Okay. Sonic Healthcare. This one has just entered my radar. Sonic Healthcare. They did release something during the week. 19th of November. I think it was a trading update. It was the AGM. Trading update, AGM. Yep. Just a CEO presentation. No trading update there, but there would have been a bit of a trading update in the presentation. And on that particular day, the share price did increase 6.8%. And then what happened after that? The share price went sideways the next 3 trading days. So Wednesday, Thursday, Friday. And that is telling me something positive. So initial reaction from the market, and then not much selling after that. So it's on the precipice of breaking out. This is one where I might take a preemptive position in the company on the belief the share price will break out over the next few weeks. I think this is on the precipice of doing that. Now, it was on the precipice of breaking out back in January this year, but failed. But this one looks interesting. So Sonic Healthcare. Now, on the flip side, Ramsay Healthcare. And I do believe you always need a plan. And I actually bought some Ramsay Healthcare shares back in March. I thought it was breaking out. I thought, oh, this is starting to look really interesting. And then that plan went to the doghouse. Sorry, dogs. That plan went to the big house and pig house. Well, that's mean to pigs. And that plan went to the mosquito house. I don't care if I'm mean to mosquitoes. And then I sold because the plan went against me. And I'm very happy. I had a plan and I sold. And you don't have to be arrogant. You don't have to be pig-headed or mosquito-headed and say, well, I don't want to be wrong here, so I'm going to maintain a position, hoping the share price will rally. I saw the trade going against me and I sold. And since then, the share price has dropped from about $54 down to $39. And this is an ugly looking chart. There's no two ways around it. There's no reason I would buy this company just based off this chart. Now, if you look at the weekly chart, we are talking about the shares in this company at a 13-year high low, no, 10-year low, or 11-year low. Last time the share price was this low was back in 2013. Look at that chart back then, beautiful chart. And the chart is going in the wrong direction. And you just don't know how low the share price can go. Not even sure there's any value in this company at these levels. I don't know. But the chart looks pretty bad. So again, technicals or charting, it doesn't mean you're always going to be right. I was listening to a podcast this morning. The guy was going through the success rates of different strategies. And one of the strategies was momentum, just going in momentum. He said there was his momentum strategy had a 30 to 40% success rate. Yes, 30 to 40% success rate, yet he was profitable about 30 to 50% per year. And you say, why? Well, you sell out at a small loss. If a trade goes against you, you might sell out at 5% loss or maybe flat, at most 10% loss. But when the trade goes with you, you're looking at 100% gains, 200% gains, 300% gains, 400% gains. So you ride your winners. That's very much a key. So you don't have to be successful 100% of the time. You're going to fail time and time again. But the main thing is having a strategy, having a plan, and when the plan goes against you, and this is for every single trade, when the plan goes against you, just take a small loss or maybe even a small win. Anyway, so Ramsay Healthcare, no interest in this. Oh, the next few companies are starting to look interesting. So this Paradigm Biopharmaceuticals, I know nothing about this. This is what I'm trying more to do. If I don't know anything about the company, don't delve deep into it. Just have a look at the chart. The chart is telling you something here. This one is starting to run. I don't know why. Look at the volume. The volume's starting to increase back in September. And the volume peak, I wouldn't say peak, but the increase in volume maintained into October, November, and the share price is starting to go on a run. And on Friday, share price rose 20.4%. Not sure if the company released anything, I don't know. And the share price, I would say this is a breakout. So Paradigm Biopharmaceuticals, markup under 13 million. I'm having a look, no profit. So it looks like this is a story stock, but the chart does look interesting. So that's a daily chart, weekly chart. Well, yeah, it's well off its all-time highs, but still, maybe there's something happening here. Maybe underneath the story, there is something bubbling up in chapter 18 of the story. And likewise, a company called Rhythm Biosciences. Again, I know nothing about this company. If you have a look at the weekly chart, well off its highs. In fact, this chart looks almost, I was going to say it looks similar to Paradigm, but the highs in each company were offset by a little bit. So the highs in Rhythm Biosciences were in late 2021. The highs for Paradigm were late 2020. Okay. Actually, that's not late 2020. That's prior to COVID-19. Okay. Let's go back to Rhythm Biosciences. Have a look at the daily chart. You won't see much in the weekly chart. But there was a nice little breakout in this company, or potential breakout in this company on the 7th of October. So really big volume coming in that day. Share price up 44.74%. But look at the share price action for like a month after that. Share price just went sideways. And then all of a sudden, share price went up again on the 11th of November, up 22.7%. And share price has been going sideways since then as well. This is a nice developing chart. Rhythm Biosciences, markup 33 million. I like this one a lot. I'm going to write it down. Both of them. Like both of those charts. Oh, on the flip side, NIB Holdings. It looks pretty bad, but I would say eventually, it says PE ratio is 14.5, div yield 5.2%. I would think eventually there's going to be some support for this as value investors see some value. I do think this point, at one point, this company was the most favored of the insurance companies, but maybe not anymore. It's going the complete opposite direction to some of the other insurance companies like QBE. Maybe they do. I think this is maybe just the health insurance. I would assume this is just health insurance. So maybe lumping NIB with QBE and IAG is probably wrong. But anyway, the chart looks pretty bad right now. Sort of reminds me of back in 2020, and then all of a sudden share price just popped up. But chart looks ugly. So is there any support at these levels? I'm thinking not yet. And the share price is at a long-term low. But I do think eventually you're going to see some value investors. They see the P ratio getting low and go, "Ooh, this is looking good. I like this company. Don't care about the chart at all. I think this is a good value. I'm going to buy some shares." And that could be support for NIB Holdings. Aroa Biosurgery, this is starting to look good as well. Starting to turn up. I think this could be on the back of their quarterly. I think. I'm just saying I think. But this chart is the best it's looked since late 2022, early 2023, although the run-up in the share price back then was just too quick. This is looking a little bit more orderly, a little bit better. The only thing I'd like to see is a little bit better volume coming in. But definitely the chart looks really good, and the share price is trying to get above that little resistance level. It is definitely trying. That's the highs the company saw back in July. So this chart is definitely looking a little bit better, stronger, maybe a little bit more bullish, and definitely a breakout is on the cards for Aroa Biosurgery. I just would like a really positive announcement from the company. On the flip side, Platinum Asset Management. This is one where I was very close to taking a position, and for some reason I just held back, which is okay. So there was also a takeover bid. That could be one of the reasons why I didn't take a position. Platinum Asset Management. The chart started to turn up. I was like, ooh, could I take a position in this dog stock? I've always thought of this company as a dog stock. When I say always, so I started investing, back in 2000, I think it was 2010, 2011. So it wasn't always a dog stock. I probably didn't know much about this company between 2012 and 2017, but since 2018, this has been a dog stock. Share price went to a high of almost $9. Now is $1.06. So I was thinking, could I? I have done it before. I've taken a position in AMP, which I consider dog stock. QBE, I've taken positions in mining companies, which I've always considered dog stocks. And it's just because the chart looks interesting. So this was looking interesting, and then the company did release something negative. That was on the 11th of November, AGM maybe, 11th of November, or was it assets under management? No, it was definitely the AGM, 12th of November. Oh, the share price dove previous to that, the day before that, fell 5.7% before that day. Anyway, since then, the share price has just fallen back. So this would have been a sell. If I was trading this, I would have definitely be out by now, but share price has just collapsed after looking promising. So not all promising charts continue to look promising. This is an example of one that started to look promising and then fell away fairly quickly. Woolworths. Okay, I'm always intrigued. This happened when the share price got to about $30.50 last time in May, and a lot of people saying, "Well, this is a buy, really good value." I was thinking, no, it's not. This company will grow at 2 to 3% per year, if that, over the next decade. And the P ratio, implied P ratio at that level was still above 20. Maybe they were thinking this is a really good defensive stock. I don't know. Anyway, I don't see any value with Woolworths, and share price recently you got to, or definitely fell below $30, went to a low of $29.20. And at this point, I'd say why. Look at the weekly chart. It looks pretty weak. The last time share price was this low wasn't that long ago. We're talking about during the COVID-19 financial panic, by the way. Prior to that was 2019. But you can see how low the share price can go. We're talking about $18 back in 2016. That's the sort of level where I might be interested in taking a position in this company. If the share price fell to, say, $20, the company is a little bit bigger since then, but I'd need to see the share price get to that level before I become interested. But you can see there was negative sentiment in this company between 2015, 2016. Share price, went into a well-defined downtrend, and that looks like what might be happening right now. So the chart does look eerily similar to what we saw back in 2015-16. I have no interest in even holding these shares right now for the long term. I just don't see any reason because lack of growth. What's the dividend yield, by the way? 3.5% dividend yield. Why? I don't understand. I don't understand why people hold these sort of companies. That's just me. I just don't understand it. And finally, IDP Education. Now, this is an interesting one. This was a cult stock among fund managers. Every single time I listened to or watched Articore, we had Rudy getting in there saying how much he loved this company. This is one of the highest quality companies on the ASX, that sort of thing. And the chart looked pretty good. Chart did look pretty good. Share price went to a high of $40 in late 2021. But this is a company that will be negatively affected or even positively affected by government regulations. And this happens all the time, not only this sort of company, but many companies on the ASX, they will be affected either positively or negatively. And that is a problem. They don't have a control over their future. And that's why the share price is in a downtrend. And again, why? Why would you be owning this company right now? Share price has just been falling and falling and falling. And I can guarantee you, in this downtrend, there's been numerous times when people have said, oh, really good value. IDP Education is now at $21. It used to be $40. I'm going to buy some shares. Now it's $12.33. That's a problem with value investing and thinking, oh, it's good value because where the share price is now compared to then, the share price can fall. I think using technical analysis, using the chart can guide you in the right direction. There's no reason to have bought IDP Education at any level, at any point over the past 2 years, almost 2 years. And even now, at $12. But in saying that, I think eventually there will be value investors coming in saying, oh, good value. Those value investors have probably been saying the same thing for the last 3 or 4 months, and there's been no support. But eventually there will be support, and then you eventually see the share price starting to move up. And until then, there's no reason to get interested. It says PE ratio is still 26.5, dividend yield 3.6%. Anyway, that's all I got for stocks. Anyhow, that's it for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.